Alright, welcome to another educational video. And in this video, I'm talking about liquidity sweep. Liquidity sweep. So first, you have to understand what means. So, for example, if there are a lot of think as liquidity as a marketplace where there are a lot of buyers, a lot of sellers. If you want to sell something or buy something, since there are a lot of buyers and a lot of sellers, you will be able to buy fast. Like it's a busy place where there are a lot of buyers and a lot of sellers. So if you want to make a transaction there, you can do that fast as possible. That's what liquidity means. So when there's a lot of buyers or a lot of sellers in the market, that's there is high liquidity in the market. So what we call liquidity sweep. So for example, you might be trading, for example, you might be selling and you can put your stop loss high. Then market will be selling, then eventually go and tap your stop loss, then continue selling. That's what happened here. For a normal forex trader, person might have entered a sell maybe here or here, and the person stop loss can be around here, above this side. And see, it was selling when it got here, it came here. See what happened here? Liquidity sweep. It came here to touch everybody that put their stop loss here, because most people will put stop loss here above this high. Most people put their stop loss there. So the market went to sweep them. It took them out. Then it came back, continued selling. That's what we call liquidity sweep. So how do you identify liquidity sweep? Liquidity sweep is always okay. Where do you find liquidity? Liquidity is around a resistance area or your support area. Is above your resistance and below your support. That's where you can find liquidity. The liquidity sweep is always going, because if for example you are trading a sell, your stop loss should be above your resistance. But once the market want to do some liquidity sweep, it will go and touch that stop loss there, then continue selling. So this is what happened here also. Some people might have bought around here and they'll put their stop loss around this area. See, it came here to take them out and they continue selling. So all these things, you have to be careful. You have to be aware of liquidity sweep, so you won't be used as liquidity. Because once there's liquidity, market start going with high momentum. Like see, it took everybody here, people that put their stop loss here, it took them out, and look at, they started moving with high volatility. Same thing happened here. Tapped, took everybody out. They started going with high volatility. So that's what we call liquidity sweep. So liquidity is always around all those high, a swing high and a swing low. All these things you are seeing here, look how this week. I'll call that liquidity. There's liquidity around this area. 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 A lot of liquidity around this area. See, all these things you are seeing here. All these things you are seeing here. There's liquidity. So you have to know how to trade the liquid market, and you have to be careful for liquidity sweep. Because here I actually entered somewhere here. This was my buy zone. This was my buy zone and it actually went up. This was my buy zone. I actually waited, I didn't trade this liquidity. I actually waited for it to go up, then come back to test here, Then you see tested it, tapped my buy zone, and it went up. Now I think I saw this because of the FVG here. I don't know the meaning of FVG. I did a video recently on FVG. That's fair value gap. You can check it out. So for more videos like this, I'll continue dropping some educational videos, but I advise you to be on the Telegram channel. I advise you to be on Telegram channel. Like all the here, I think I've explained this already. All this side, there's liquidity around this here, around this side, because this is where most people will put their stop loss. So the market might want to like take them out. Sometimes that markets eat people stop loss and go that way, or sometimes that it eats the people stop loss and keep going the opposite direction. That is, if you are selling, you can eat your stop loss and continue buying. And sometimes that you can be selling, you can eat your stop loss, then sell back. So that's it. So I don't know if you are confused or you still don't understand. You can still ask me question, or I can still do another video. So bye for now. The link is in my bio.